Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, February 12th, 2021. In this video, I'll start out with a very brief update on the equity markets, and then I'm going to roll into some trade ideas, and they're going to be a little bit different from the usual trade ideas. Typically, vast majority of the trade ideas on the site are fairly liquid stocks. Number one, not always large cap, small, mid, large cap, but traditional stocks. And over the years, while I've shared many, quite a few penny stock and low price stock trade ideas, I always impress upon everybody the risk in these stocks. And again, I wouldn't share those if I didn't think there was an attractive risk reward ratio in a trade to be made, but I always have to throw out that big disclaimer, they're not for everybody. So I'm going to go over some of those trade ideas now. And why am I doing that? I have a whole watch list I put together. I call it junk stocks, just because that's what's been going on lately. There's been a dash for trash. Big surge in low priced, in many of these, some cases penny stocks, some cases they might not be penny stocks, but they have questionable to abysmal fundamentals and long-term outlook, like GameStop and AMC, the ones the Reddit crowd ran up. But as I like to say, when in Rome, so that's what's going on right now, and it's a momentum trade, and as long as the momentum is there, there's trading ops to be made. So let's start out with the broad market, and just real quickly, we'll move on to the trade ideas. Nothing's changed on SPY, S&P 500. My primary trend line breakdown, back test. But we've been moving sideways now, for the last, I don't know, week or so here. So stalling out in a little consolidation range doesn't mean we can't break to the upside and go up, but just recognize it for what it is. It's a little consolidation range. You get that, and then you trend. So this was a trend. This is a consolidation or sideways range. Level to watch on that 60-minute chart right here is 388.50, and then QQQ, jump back to the daily chart, still above trend, so there's your primary trend line right there, comes off the March lows. And then the other two I'm watching closely. So to get a sell signal on the market, we're going to need QQQ to break that trend line. We'll also need to see Apple give up this purple trend line I've been highlighting recently right here, which is starting to crack. It's just right on there right now. So much more downside in Apple. Should do the trick, but you want to see, again, other market-leading stocks break down. You want to see some decent evidence that the indexes are rolling over. What would that be? For example, on SPY, an impulsive rejection off that trend line I started with, the daily trend line moving lower, taking out those levels on the 60-minute chart, like 388.50 on SPY, QQQ 330 needs to be taken out. All those things together, you got to give it the benefit of the doubt because the trend's been strong. So other than that trend line on Apple that we're flirting with right now, Tesla's the other, one of many I'm watching, but one of the big ones, and it's flirting with that 800-ish level. Now it's as I talk, 796.44. You can see it jumping all around. 796.50 on a $800 or 802 stock is statistically insignificant. It means we're right on support, so I don't consider that a breakdown. Technically, we're below it, and that's why I'm updating this now. What you want to see is, solid red candles start to see impulsive selling down through there, and that's likely what you'll get once that level clearly goes. But you can see right here, we got about that low before, whip back up. So again, we're dancing on the line now. Tesla's either going to hold and bounce as it's done in the past here, every other time we hit that level, or it's going to break down. And if it breaks down, watch Apple, watch Microsoft, Facebook, QQQ, SPY. Those are the things to look for. And then keep in mind, I'm about to roll into trade ideas. They're all long side trade ideas. But when the music stops, meaning when the uptrend ends and it's clear to all and we start selling off, long side trade ideas for the most part will get sold down. Now there's one little caveat or asterisk to that, and that is the fact that the trade ideas I'm about to share with you, not all but most are penny stocks. And penny stocks tend to march to their own drumbeat because they're not components of any of the indexes. So they're not subject to forced selling when the indexes are under pressure, or forced buying when the indexes are going up. So it's not unusual to see these stocks go up when the market goes down. However, don't stay too late to the party. Before I get into my watch list right here, I'm going to show you just some recent examples real quick. And these aren't the ones, these have already trained have left the station, but I just want to show you the type of gains involved here. SRMX. Okay, most of these are penny stocks, if you can make out the scaling here on the side. And you can see, and a lot of these were technically induced, the breakouts. You know, this one had resistance here. So just from the breakout, and just where we started to run lately, this one has run up about 4,800%. That's not a, mistake, 4,800%. Incredible. And again, it's a penny stock. It's what these things are going to do. And you put a small fraction of what you might normally put in Spire, QQQ into these guys. And here I'm just, again, trying to make the example of the upside potential on these. And so I evaluate every trade from a risk-reward perspective. Penny stocks will never be the primary focus on the right side of the chart. I'll give you my word on that. But over the years, I've covered them when the opportunity is there. In fact, the first official one was about 3 years ago, and it was ACB, Aurora Cannabis. At the time, it was ACBFF. It was an over-the-counter, a bulletin board stock. But I made a strong case for it fundamentally and technically, and we were buying that at 55 cents, and rode a good part of it up and in and out since then. And the stock is up thousands of times since that. Here's another one, HIPH. This one's up about 1,180% just recently. So I'm just rifling through these to show you the gain potential in some of these trade ideas. And there's some that time permitting at the end of the video, I'll show you another handful that have done this, but then started to correct, and I'll show you how fast they fall when the music stops. There's 2,500 and 40%. The pop-up box to the left, when I grab and press down on my cursor and the crosshairs pop up, look at the very bottom, about 3 lines up in green on the right. That'll show you the percentage gain. And I'm measuring from where this thing started ripping. Again, that was 2,500%. LTRM. No, that's not LTRM. Okay, no, I think I was getting that LTNC, which I just showed you, mixed up with CTRM. There we go. All right, and this was a nice setup here. Nice divergent low. From that divergent low, this one's rallied about 1,455%. So again, if you don't really take whatever your number is, whether it's 2,000, 20,000, 200,000, and a stock like Apple, you just put a few hundred or a few $1,000, depending on who you are. Really, on these, they're thinly traded. You can't even take that big a position. So if you're a large size trader, this is the realm of the little retail guy, and institutions don't touch this stuff. Most of these stocks, once they enter penny stock, they'll eventually go away and go to zero. Bankruptcy is always a risk in all of these, but we're almost done here with the examples. ELCR, these things have been exploding. But then look, let's say you were chasing this one, you bought it here. It was up 2,000% in just a couple days, a day or two there. But then the drop from that high on the pullback was 74%. So do the math on that. You put in $10,000, you would have lost $7,500 right there. But then, kick back up. All right, so you get the point. These things are explosive. And again, that's what, look at the volume. You can see my volume bars down here. This is what people are chasing right now. So like I say, it's a game of musical chairs. As long as the momentum's there, there's money to be made. Take position sizes very small, spread it out. I like to take a shotgun approach. I don't like to just pick one if I'm going to play these. I like to pick a mixed bag. And let me try to get that watch list, get the right watch list queued up here. There we go. Okay, so we're going to go through these at just whatever order they're here, no particular order. HCMC. This one looks like it's flatlined. Again, Pennyville. This is half of a cent. But look what's going on recently. Here's what stands out to me. I need to turn the volume up so you guys can see that. This is a big part of these guys. These things, and keep in mind, as long as there's volume there, you have somewhat, in quotes, decent liquidity. But when the volume dries up, liquidity in these things suck. That means the bid and ask spreads. You can put an order, try to sell at the bid, but sometimes you might not get filled because there's just not many buyers and sellers on either side of the trade. But when there's volume, there is. So you can see what's happened here when I zoom in. See, I have to do that. I have to zoom in. You can see the volume bars. And then you can see the lift here. This thing started to, since it took out, there was resistance right here, and it started to run up, and there's a volume trade. I like this one probably the least because it's so low priced, but it's just a momentum trade. It's going up only because people are buying it. And look, I haven't done any due diligence on these companies, nor do I care to. I'm just sharing aggressive gunslinger trade ideas. If you're interested, take them. If not, pass on them. QUIK. Okay, here's one that's not a penny stock. Little bit better chart here. We have, let me move my list if I can without, bad things are about to happen. Let me pause the video. Okay, I had to resize everything. It snapped full to the window. Let's just do this. Let's get rid of that list. Here we go. And see, this one had a nice downtrend line. There you go, downtrend line, and a breakout. And the breakout, look at the volume down here, was impulsive. This is your breakout. Actually, the breakout was, kind of limped through, false breakout, failed, broke out again, but not impulsively. But then yesterday it started moving up impulsively on volume. So they're buying this one. It's being picked up on traders' radars. Maybe there was earnings. Tells me here it's a semiconductor stock. And I found all of these yesterday. So this one I was going to say, if it hadn't broken out today, your next buy signal is on a break of 570 or pull back to the trend line. However, we've taken out 570. And so there it is. It opens the door now for the next target up here. It's 786. Had I covered it earlier today, it would have been closer to 570, would have been my preference. But there it is, 25% or so if it hits that next target, and you can see other potential targets as long as the momentum is there. Again, this one is not a penny stock, so you can weight it a little heavier, maybe do some due diligence on it. If you're planning to hold it for any period of time. All right, next one up is PEMTF. Another one. I found all these yesterday. This one broke out today. So there's your buy signal. I had a downtrend line here. Not the best defined downtrend line, but again, you can see volume starting to pick up. Nothing huge so far, but a constructive chart. We put a nice divergent low, broke out. It is penny stockville. It's trading right now at 0.064. There's your breakout. First target's right there at 0.0815, or we'll call it 0.08, and then 0.1339 or so right there. Second target. PEMTF, Thoughtful Brands, whatever they do. Alrighty, next one up. GLMD, not a penny stock, but it is a biotech. I always throw out the caution to biotech stocks, especially lower price biotechs. Typically smaller biotech companies, they don't have the diversified pipeline as an Amgen or one of the big biotechs, and so therefore if they have everything riding on one drug in clinical trials and that drug gets approved, great, the stock can explode. Or if there's positive results during the clinical trials, the stock can explode. On the flip side, negative results, patients start getting sick or dying on the clinical trials in phase 2, boom, that's it. Or the drug gets denied by the FDA, and so you have a higher risk. However, I'm showing you this because the chart's constructive. Nice downtrend line. Positive divergence. This is what I like to see in bottoming plays. Breakout, backtest. Already hit yesterday that first target, which would have been my first target had I seen it sooner at 629. But a break above that level would be the next buy signal, and these are next targets. You can see 735, 940, 1238. Actual resistance levels. Maybe sell a penny or two shy of those if you take it. HUY, not a penny stock either. Again, these aren't all. The reason I have some of these non-penny stocks lumped in here, they just came across as I was looking yesterday, so I lumped them in, figured I'd get them out to you guys. HUYA, this one broke resistance recently. Had resistance here, there was a gap there, another reaction high, and a breakout on volume yesterday. And so the objective entries on this, ideally if you could come back in and backtest that level, because you could then go along with a stop below. Or you buy it here, let it run. You might have to give a little more room on your stops. It's a breakout. See how far this carries. GRPN, again, one more, probably the last of the non-penny stocks. This is a $1.1 billion company. This is Groupon. More of a setup, definitely a setup, not an actual trade. A lot of these are setups. Some of these are actionable, as I've tried to point out. But Groupon has a pretty big resistance level at about $45 or $40. It's its gap right here, big old gap. and we failed at the gap before, but it keeps making a series of higher lows so far. So in a sense, it has a sort of symmetrical or ascending triangle pattern. Upside break would be bullish. I mean, you could also short it here, but you can see the pullbacks are getting smaller and smaller. But if you want to go long, you want to wait for a solid break above 40.05, and if it gets rejected here, pick it up at the trend line or wait for a short down below. I don't have a fundamental opinion on Groupon. I'm just showing you a chart that has some levels to watch. Not one of my favorite trade ideas, but again, I told you I'm struggling to find objective, long or short entries right now, or long or setups that have attractive risk reward profiles and clear levels. Okay, next up would be HYLN. I have to zoom back here. You can see this thing was, in a holding pattern down here around $10 forever and a day. Something happened. I'm sure you can find the news headlines back here. On June 19th of last year, the stock started to explode, went up, put in a big old divergent high, and that was, your cue to either start taking profits, tighten your stops, or just get out. And if you didn't, you rode out you gave back 73% of your profits. So simple stuff. Go, look for the divergent highs, get ready to position short or get out of longs, and then look for divergent lows, which we just had here, and then get ready to get long. Or get out of your shorts. And so I pointed this one out because I picked it up yesterday. It had high volume right there, big volume off this divergent low. It's got some work to do, but I think what'll happen, this one will probably work its way up here to this 20, unless that was a one-day wonder, that pop right there. It's hard for me to tell you right now in a very objective entry. There's mild support here, so let me just say this. I will say that it is objective to go long here if you want to take a shot with a stop somewhat below $18. First target be 23.58, give or take, and then after that, if it takes that out, target that previous reaction high from back here about 27 and change. And it's a constructive chart. If the stock market holds up into 2021, continues to rally, since this is not a penny stock, it's in the auto parts, it's an auto parts company. Yeah, I would position, just kind of, at least for the time being, tuck this one away. With the appropriate stops in place, of course. All right. TNXP. This one is a biotech. Just exited penny stockville. It's trading at $1.88 right now. Pretty constructive chart here. Let's see if I can get rid of that. Yeah, you can see a downtrend line right there. We broke out of the downtrend line, and it was impulsive. Big impulsive candle followed by a gap, more upside, ran right into this level, right where about a little bit above where they did, or below where they did the reverse 10-to-1 split, right there, and that is resistance. So 244 is both the first target and resistance. So the way this one is, it's been in this trading range right here between 244 and 52 cents, and it may go back down to the bottom of the range. You could I wouldn't short it. You could short it with a stop somewhat above, try to ride back down to the bottom of the range, but the fact that it put in, or almost a divergent low here, you had a slightly lower there, I'd be on lookout for a breakout above 244, and then that could run you up to 595 or almost 17 right there. Those would be my two targets, about $6 and $17. And that was TNXP. This one is TMBR, Timber Pharmaceuticals. So I guess a lot of these, biotechs and pharmaceuticals coming up on my radar. This one also just had a brief dip into penny stockville, but it's out of that, meaning it dropped below $1 a share. That's quite often bullish too, because when a stock drops below a penny a share, people get worried. If the company stays below $1 a share for too long, I might have said a penny a share, $1 a share, they face being delisted. But then when a company can regain that level, that's bullish, and you can see that's what happens. We briefly dropped below the $1 a share, and the buyers started stepping in vigorously. They also put in a divergent low, so I like the technicals on that. I like the fact that it dipped below $1, probably shook out some longs. There are certain mutual funds that cannot hold penny stocks, so by prospectus they have to sell. They get washed out, and it regained it. So there it is, divergent low. Coming up on resistance from about $2.85 to maybe $3. I'd probably put a second, about $2.85 to $3 as a resistance zone. So not the most objective time to go long, but if it can pop 310 or so, longer term target here is about 980 with that downtrend line also coming in, and that would be a nice move if it gets there. So more of a setup, and that would be about 330% or so if it gets to that 980 or that downtrend line level comes in around together. All right, couple more and we are finished. INPX, here's one. Been in a obviously clear downtrend for quite a while. Broke out, but that downtrend line, it didn't really do much after taking out, and it wasn't a clear downtrend line. But let's zoom in and look at it. It's put in divergence. It's been moving lower, 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 while the indicators have been moving higher and higher and higher. That's positive divergence. And the level that I have is 183 resistance right there. You can see it was this major reaction low. We broke it, and that put it in the trading range. It's been bouncing up to about that 183. Yesterday it made an impulsive breakout, but no follow through today. So on this one, here's how you could take it here. It broke out yesterday, it was impulsive. You could take it with a stop somewhat below 183, give it a little bit of room for a little whipsaw move back in there. Or you can wait to see it take some volume and take out yesterday's candle. And if so, the gain potential. Again, this one could have been a whipsaw, and this thing could be back down. It could go to zero. But if it plays out, you're talking to that 677-ish target, about 260%. And if it gets up to that next level, about 1,470%. So again, junk stocks, but because again, it was just down below a penny a share, or a dollar a share, I'm sorry, back above it. PASO, last one, Patient Access Solutions. There was a downtrend line, not super well defined. We had a little whipsaw there, but yesterday, big volume, big move up, broke out, and so far, it started to follow through on the breakout, but it pulled back. So it's back testing, or back tested the trend line. So you could take it along here, a shot at it with a stop somewhat below. And there's previous reaction high right here. It might run into some resistance about 3 cents a share. Otherwise, I'd have a target here, at least a minimum swing target up there at about 4.50, 4.5 cents, I should say, a share. That's 0.045, we'll call that. Okay, and again, take them as you want, and don't forget about the broad market. The broad market starts to crack. What tends to happen too is traders that might be trading some of those, they're leveraged out, they're buying on margin, they might have Tesla and some others as well as their core holdings. And so when the market breaks, and Tesla's coming under some pressure today, Apple I already showed you, if the market breaks, you may see that dash or trash trade get the brakes put on it. So, all the main thing is, if you take them, don't fall in love with them. Don't stay too late to the party. Cut your losses. When they can turn very fast. Those stocks, especially the penny stocks, they can gap down 20, 30, 40% on you. So you have to take a position like that, expecting and being okay with the fact if you wake up to, say, a 30, 40% gap down. Are you going to be okay, or are you going to be wiped out? If you put 10 grand in that stock and it gaps down 40%, you just lost $4,000, and there's no guarantees it's not going to drop another 40, 50% from there. So, all right, I think I did my job as kind of impressing upon the risks of those, and also where we are kind of late, I think, in this stage of this dash or trash. Would have been great if I would have picked up on some of these, or some other penny stocks earlier. But again, my job is to find trade ideas for you, tell you what I think about it, and your job is to decide what to buy, what not to buy, and and I'll give you my thoughts if any of those pan out or don't pan out, where to take profits, which I kind of laid out some targets today. But again, if any of these follow through or break out, I'll post some updates on them. Okay, let's wrap it up here, and let's see what the markets end up doing today. This has been Randy Finney with Right Side of the Chart. Have a great day.